By now, it probably comes as no surprise to most people for me to say that rates are starting to creep up. Between the not so transitory inflation and the actions of the Fed, the best may be behind us at least for a while. That being said, rates are still extremely low and near the bottom of the range going back decades, but seem to be on their way back up for now. Despite that little dose of reality and wake up call, there are a lot of would be buyers out there who are pre approved and looking for homes, but can't secure a contract given the severe lack of inventory. This becomes a very stressful situation, especially as not only home prices, but now also rates are going up, which means higher monthly payments on the same home that they've been looking for. And possibly to the point where buyers are getting priced out of those homes and may need to adjust their expectations and target price range. While there's no perfect fix to this, the good news is that we do have an option to at least limit the risk of rising rates, while still preserving the ability to lock in a lower rate if they actually stay the same or even drop over time. This protection comes in the form of our lock and shop program combined with our extended locks, which go out as far as a year, but you could pick from the 3 month, 4 month, 6 month, or 9 month extended option as well. Now, extended locks are commonly used to lock in rates for people purchasing new construction homes, which won't be built for months down the road, well beyond the typical 30 to 60 day rate lock periods people use to purchase existing homes. They allow buyers an opportunity to secure a little higher ceiling rate as a form of insurance, but then provide a float down option when you get within 60 days of closing to the current market rates if they're lower than what you originally locked in. So you still have the chance to do better depending on what happens with the market. But if rates continue to increase, at least you know you're protected with a cap in place. So you have the peace of mind that you aren't committing to buying a house that will suddenly cost a lot more per month than you had budgeted for. Now, essentially with our lock and shop program, you're locking in the same way for an extended period of time to cover a longer period that you may need to find a house and get a contract. But in this case, we simply treat the property address as a to be determined for now and fill it in once you nail down the contract. This strategy will protect you during times of rising rates, as we may be facing now, but also allows you to do better if they don't go up after all. There is a deposit that is required of 0.5 point or 0.5% of the loan amount, and that is refunded at closing. Then the cap that is added to the going rate varies with the lock period. But for example, it runs 1/8% on a 90-day lock, 1/4% for a 6 month lock, 3/8% on a 9 month lock, or 0.5% for a 1 year lock. And again, these are just caps, so you nail down a worst case scenario. But if the rate within 60 days is actually better, we give you that lower rate through a one-time float down option. So this is something in an increasing rate environment that is worth considering. Let me know if you have any questions on this or anything else for that matter. And of course, I'd be happy to discuss anytime. Thanks and Happy New Year.